Okay guys, today we will be discussing candlesticks from beginner to advanced level. These will be a multiple part video. So we will start with the basics and then we will go on forward. Okay, so let's start. Okay, so we all know what are the basics of a candlestick. I'll be quickly covering the basics and then moving on as soon as I can. So here you can see this is a white or slash green candle, and this area, the big area, this is called the real body. If it's a green candle, the open is the lower one and the close is the higher one, and the upper wick and the lower wick are called shadows or wicks. This is called high wick and this is called the lower wick and higher wick. This is the same case, just if this is black or red body, then the open is above one and the close is the below one. So that's the basics of the candlestick. This is a green candle, this is a red candle, and vice versa. This shows that the stock is bullish, this is a bull candle, and this is a bearish candle. Okay, so first of all we have doji. What is a doji? A doji is a candlestick with a very small real body and a long high wicks. Okay, high wicks or small wicks. So here you can see what is doji. Doji is market is either in up or downtrend. Open and close prices are the same or nearly the same. So here you can see the open and close are very close to each other, and the wicks and the shadows are very high and very low. So this is a doji. And what does this mean? Market implication means that market is at a point of indecision, which means that market doesn't know that where it's going. They are making a decision right now. It's not bullish, it's not bearish. Okay, so how can we use doji? Doji can be used as support or resistance lines. Highest high of doji and prior candle for resistance. So here you can see it is not used as support, but the highest high of doji and prior candle for resistance. Like we can use like in the following picture here we can see the highest high of the doji. This was the highest high of the doji, right? So this was the highest high of the doji and this was used as the resistance lines. Yeah. Similarly, so it's very clear now that dojis aren't used for support, but it can be used for resistance. Right, highest high of doji and prior candle for resistance. Right. Okay. So doji is done. Now let's just go to the market psychology and what different candles mean. So here, if you can see the first one, what does this mean? This means that the price went low, but suddenly the bulls entered the market and then they raised the price back up. This is also called a typical hammer. Most of you would have identified it. And here we can see that market is in a bullish momentum. In this one, it's the opposite. Here you can see the price went up and bears entered the market, and then they they retrace the price to the initial level. So this means that the bears are in the progression. The bears are in the strength over here as compared to the bulls. What about the third one? The third one, here you can see there's this body and then there's high wick and the low wick. So this means that neither bulls nor bears are in market control, hence the candlestick of indecision. So that's some psychology of shadows. Now we will be looking at high wave candles. Now what are high wave candles? Now they are high wave candles. High wave candles and doji are almost similar, but the difference is that doji, the open and close are very close to each other. But in high wave candles that is not the case. In high wave candle the real body can be big or small, but the wicks would be really high on both ends. Market in up or downtrend. What is the basic criteria? The market should be up in up either uptrend or downtrend, and very long upper and lower shadow, a small real body towards the middle of sessions range. So you can see the body is small, whereas in doji the body is very close to each open and the close of the day. Here if you can see the market implication, again it's confused, but here this is not used as support or resistance. However, doji is definitely used as resistance but not support. Okay, if you can see here, now this is almost a doji, and here if we can see right here, so yeah, here if you can see the doji is acting as the resistance line of the previous resistance high. So we can use this as it is. Okay, now we will be covering some reversal signals, and the first of the very reversal signals is the hammer. And what is the basic criteria of the hammer? The market is in a downtrend. Now, this is very important. A hammer is only true if the market is in a downtrend. For example, if you get a candlestick like this, okay, so now this is a hammer, but this is not a reversal signal. This doesn't mean that it's gonna continue the bullish strong. However, if we just reverse the trend, like if this is a downtrend over here, and the hammer is forming right here, so now this is a hammer, and that means that this hammer will act as a support line for the future price trades. Okay, so what happens is this is a small real body, either color at or near top of range. It could be either red candle or a green candle, that doesn't matter. However, the body is really small and the lower wick is very big, almost twice the height of the real body. So here if you can see, like this is one size, and now the lower wick is almost the twice the size of the lower body, right? So that's what size a hammer is. Now what is market implication? Now the market implication is that a chance to buy at the bottom, which means that this is a potential reversal signal. And how does this act as a support? This act as a support as low of hammer as support. Now what is low of hammer? The low of hammer is the lowest line right here, right? This area is the low of the hammer. So this area will be acting as support in the hammer. Now if you can see in the real signal charts, here if you can see there were three hammers, right? This is a hammer, this is a hammer, and this is a hammer. Now what happens is that this hammer here, this would have been the 14.10 range would be the support line, and this would act as the support for the future reference until this support becomes broken. Here if you can see the price reversed from here and went to the top, and just like this, if you can see, this is the opposite of the hammer, also called a shooting star, which we will be covering in the future lectures. However, this is the reversal opposite of the hammer, and after this candlestick the price reversed, and again we can see there was a hammer formed over here, and then this goes up again and again, and this acts similarly in the future. Okay, so we have covered the basic candlesticks. There would be more advanced candlesticks such as bullish engulfing pattern, shooting star, and many more that I'll be covering in detail. Now if I can show you these in the live trading charts, so just like this, I'll be covering this signal which just formed 3 days ago, 3 or 4 days ago, I can't remember. And here if you can see, and this would make it very clear, it's a stock that bounced really well, and it was at 7.450 and it was in a downtrend. It reduced to this level at the 6.5 levels, and then if you can see, now this is a hammer, right? Now this is a hammer. Now there's a small real body, and the lower wick is twice the size of the real body. So this is a perfect hammer. Now if this would have been made on any other stock, on any other uptrend, that would not be valid. For a hammer to be true, it should be a downtrend. So that's why I'm focusing on this, because most of you know it's a hammer, but most of you doesn't know that a hammer is only true if it is in a downtrend, and furthermore if it gets stronger if there is a previous support in the area. So here if you can see why this signal was really strong for result. First of all, they had news the next day, and secondly, hammer had the support area of 6.10. This support was tested one, two, twice, and now thrice, three times, and again it was supported by a gap right here in this area. This is a gap, and as we have discussed before, a gap always acts as support and resistance lines. So here you can see the hammer was formed right at support, and then it bounced back beautifully. I mean, if we would have catch this, this would have been just amazing. So yeah, that's a good reversal signal hammer, and we can just trade and find good stocks just looking on hammers. For to find plays like hammer or search for candlesticks, you can go to Finviz, and you can just go to all, and here usually just there's an option for hammer. Now if we search hammer, like there's millions and millions of it, but it doesn't show it in a downtrend. Most of time it just shows what is forming a hammer, right? So here you can see now that in the first chart is this is a hammer, but right, this is an uptrend, so this is not a reversal signal. Okay, this is also called inverted hammer or a hanging man when it's in uptrend. We'll be discussing that in detail. However, here in GPS we can see that the hammer is forming right on support, right? So this could be a possible reversal signal for GPS. Similarly, that's how we have to trade. We have to use the western candlesticks, the western signals and the eastern candlesticks to make the best out of our trade. So that's why I love hammer. Hammer is a good reversal signal. Here you can see, now this is a beautiful hammer, right? It's in a downtrend. Market comes from 387 to 378, and then there is support from the previous three candlesticks, 1, 2 and 3. This area is full of support right here, and now it might bounce back to the top high of that area. So that's how you have to look over hammers and how to find plays on hammers.